Hey guys, welcome to Gold Rush Live. Every week we go over precious metals, what's going on in the macro landscape, all the way from oil, soybeans, and then going through the stocks. We go through energy stocks, we go through gold mining stocks, you name it, we do it here. Sam is not with me today. He's having a great time in New Orleans, so you guys should feel free to hit him up and tell him he should be on here. I'm just kidding. But definitely say hi to Sam. He's been doing a great job out there, really killing it. But it's just me today. And I've got a bunch of stuff to talk to you guys about. I wasn't able to go to New Orleans, but that just leaves me with more stuff to talk to you guys about today. Starting off, we're the Gold Rush. We're basically everything macro at All Star Charts, covering, obviously we cover gold and gold miners, but we cover just about everything in the macro landscape. So, starting out with this first slide. So, if you guys saw the post yesterday, basically I talked about the fact that if you're looking at politics these days, you're basically, beholden to my guy's got to win. You get in fights with your friends about it. You think that if this person's going to win, my life will be better. If this person loses, it'll be the end of the world. And I'm just here to say, as a trader, like, you got to stay out of that. And the only reason why I'm bringing that up is because I've had so many conversations lately with people going, Donald Trump is here, he's doing this, therefore I can't buy this. Or, this is going on in the world, there's a war over here, I can't buy this. And once again, like, think about Israel last year. Great example of this. Everybody's going, there's a war in Israel, all of these things are happening. Like, why would you ever buy it? And the last couple of years, Israel did pretty well, outperforming most countries. Same with China. The last couple of years, China I mean, basically, if you go back 3 years ago, nobody wanted to buy China. And then last year, we started to see some relative performance, some strength in China, and then it started to take off. And then it's been one of the outperforming sectors or outperforming countries this year. You look at energy in 2020. This is probably my favorite one of all time. Donald Trump is in office from 2016 to 2020. When Biden gets in, everybody goes, I mean, all of the analysts were on the same exact team. This is why we kind of fade the analysts a lot of the time on Wall Street. They're on the same team going, if Biden wins, you want to buy solar, you want to buy technology, you want to do this. And if Trump wins, and this is before the election, obviously, you want to buy energy stocks, banks, and so on. Then the opposite happens. Biden wins, banks and energy stocks were the leaders. And then through Biden's 4-year period, energy stocks were the outperformer. So once again, everything is just much different than you think. And this is the reason why we look at the price action. We look at where money is actually flowing. And that means everything to us here at All Star Charts. I think that's really, really important. So starting out this, just take a second to understand, like, when you're a kid, you get told, well, wrestling is fake. Now, the guys do get hurt. There are obviously real things out there that they are doing, but it's staged who wins and who loses. And so sometimes you got to just think of politics like this, at least as a trader. I'm not saying like you're in your personal life, do whatever you'd like to do. But as a trader, you got to just think of it like they're going to do whatever they're doing. I'm going to do whatever I do. And if things get really crazy, I'm just going to stick to the data. That's it. I'm going to just become more data driven if things get really crazy. And part of this is to focus on your mental health. And I talk about this stuff a lot on my channel. I put stuff out for Gold Rush, from time to time about it, which is your mental health is really important. And so the reason and why I brought this up, and this is just a very bland thing that, everybody can find online very easily, but it's the same thing for traders. Build strong relationships. Find people that you look up to. People that you think are good traders, send them a chart, have them, look at it and go, well, that I had when I started trading, I had somebody tell me my chart was a Space Invaders pattern. A guy I looked up to, but it also helped me to simplify my charts after that. But also it's someone to talk to when things are getting hard. Trading isn't an easy road where it just goes straight up and everything's good forever and ever and ever. Trading is hard, and there's a lot of volatility in your portfolio and in your life because of trading. So because of those two things, You have to really figure out, who do I talk to when I'm having a bad time? Who do I talk to when I'm having a hard time? And then who's going to be there for me? And maybe that's a family member, maybe that's a close friend, and sometimes it's going to be other traders. You just got to look around and figure out who exactly that is and who that's going to be. Now, daily emotion check-in. I wanted to bring this up for a reason. So, as a trader, I always tell people you got to journal. And everybody goes, send me trading journal stuff. And I'll send them, one of the ones that has buys and sells on it and so on. I posted that on my channel before from time to time. But at the same time, what's more important to me is to wake up in the morning and go, okay, what is wrong with me? Am I upset? Is something, can I FOMO right now? Am I too high? Am I too low? And I always explain it like this. If you look at somebody who's let's say Steph Curry, he's a great basketball player. I'm sure everybody on here probably knows who Steph Curry is at this point. You watch the guy play, he has a great game. He walks off the court, he looks like he just another day at work. You watch the guy play, he has a terrible game. You watch the guy walk off the court, all the same. You watch a game where he's making every shot or he's missing every shot, he's going to keep shooting. And once again, it's the same probabilities as trading. Great 3-point shooters in game shoot at a 40% clip, meaning they got to shoot a lot. And sometimes they're going to have games where they go, 6 of 6, and then they're going to have other games where they go 0 of 6. And this is how trading works too. So sometimes it's hard, and sometimes the probabilities are not on your side at points. But that doesn't mean you should stop trading, but also you should check in with yourself and make sure you're not at a point where you could stop trading or get upset about something like that too much. Giving your brain a break. This is also another thing I want to talk about, very close to me. Just the idea of, hey, I've been sitting here like I have kids who come up to me every single day and say, I'm learning a lot about trading right now, Jason. And I go, oh, cool. What are you reading? What are you doing? And they'll go, well, I'm, staring at the screen all day long and learning price action. And I go, that's not teaching you price action. Price action is, understanding when you should buy and sell and so on. Like the intraday noise is just something that's going to drive you crazy unless you're a day trader. If you're a day trader, you do that, great. But if you're a trader and you're trading on a 1 week to month to 3 month to 6 month time frame, you don't need to stare at the screen all day. Really, you don't need to stare at the screen all day, even if you're a day trader. But that's another story for another show. But yeah, so, getting your morning routine kind of together, understanding that you need to journal, write something down to kind of get out of your own way. These things are important. I know it's boring stuff. Trust me, we're going to get into the trades in just a second, but I wanted to go over this real fast. Hey, what's up, guys? Thanks for saying hi in the chat. And feel free to leave some questions. I'll get to them in a little bit. So Mulvaney, I brought up Mulvaney's chart today. And you guys have seen me share Mulvaney's returns from time to time, talking about trend following and so on. Guy has phenomenal returns, one of the best performing funds over the last, I think, 25 years. So, but once again, he's in a nasty drawdown right now. I think April was 40% down for them as a fund. But what I'm showing you here is that I bet money on this, that he will continue to follow his plan, that he will hit a new all-time high soon enough, and that everybody will be like, wow, he's a great trader very soon. But I'm showing you this because this is a professional at a high level, because every single professional has had 40, 50% drawdowns at times. Go to Warren Buffett, he's had them. Go to George Soros, it's happened. Go to anybody that you think is a great trader, they have had bad periods of time. So for yourself and your own sanity, if you had a rough period of time this year during February, March, and so on, you weren't in things like gold miners or international stocks or weak dollar plays, all you can do now is basically put on the next trade. Put on the next trade, let it go. It isn't a big deal. Everybody's made mistakes as traders. Every single trader has made a mistake. So move on from that and let's hop into it. So the dollar is probably the most significant thing that I look at every single day. And once again, you guys know I talk about the dollar like crazy, but this is a little different of a chart. This is the COT report. So when we look at the COT report, it's very significant for a lot of reasons. One thing that really always sticks out to me is the commercials. Commercials are the red line. Are they moving to a point where the positioning is lopsided? And the answer right now is yes. Commercials are very rarely completely long the dollar. And when they get very long the dollar, that usually turns into a situation where a bottom forms. And so back in January 2025, you guys will remember we had a show, we had posts. I mean, it was endless from Sam and I about the dollar possibly topping. And that was based on positioning. And then basically we got basically the commercials at that point were extremely short. The speculators, which is the green line, were extremely long. Basically, the speculators, we call them the dumb money. The red line is the smart money. Really, in my opinion, it's all dumb money, but it's easier to put that together. So when the commercials are at extremes, you want to be doing what they're doing. So if they were shorting the dollar, we wanted to short it. Now they're going long. I don't think the dollar is in an uptrend here. I don't think it's just going to reverse and start going higher and we're going to go past 110 or anything. But I do think that the dollar could continue to bounce here until this positioning is kind of unwound a little bit. And then we'll probably go lower. But for now, I would just say be careful with this one. If you are trying to buy the dollar or buy dollar plays at the moment, I would think that it's going to be short lived, very similar to how I talk about bonds. The rallies in bonds will probably be very short lived as well. So hop into the next chart. This is one people ask about all the time, which is the dollar and yields. Jason, the dollar and yields have to always go together. They do not. And I made a post about this, the correlation of this, just showing you guys that this changes over time. 2019 was a period of time where bonds were ripping. I mean, they were ripping like crazy in 2019. So basically, they bottomed out in November 2018. Then they rallied until March 2020 with a huge blow off top in COVID. And at that time, the dollar was actually moving higher, but also gold was actually moving higher in 2019. So it's mainly what I'm saying here is don't get too wed to correlations. Follow the price action. If the dollar is moving down and yields are moving up, I'm not going to think twice about it and go, the correlation should be this. You just got to follow it. And look at the chart. It changes over time. You know, you go through the 2000s period, you go through the 80s period. I mean, there's lots of changes over time in this correlation, so don't get too stuck on it, especially as macro traders like most of us are here. And so hop into the next one. This is my long-term chart. This is a very long-term chart, but this is basically showing when the danger zone hits. And so if you go back to the oil price hitting single digits, that's all the way back in 1999. Oil went under $10 a barrel. And then if we get to the great financial crisis, this is where oil's over, I might have been over 150 a barrel at one point. I know 130 for sure. I can't remember. Somebody just said 150, and I can't remember that fully at the moment, but I think it's over 130 for sure. The highest oil has ever been is the easier way of saying that. And then go to the other end of it. Oil front month future goes negative. That means the front month contract. That month was April of 2020. April 2020, oil goes negative. Everybody goes, it's the end of oil. Oil's dead. It was the best sell the news moment in history for oil. Oil's negative $50. And then next thing you know, starts ripping right back to the upside and goes all the way to 130. So huge move in oil there. And then now where we're at today, let's pass up the Russia-Ukraine war. I'm pretty sure that's recent enough for everybody. Where we are today is we're right back in that danger zone and we're bouncing off from it. Will commodities, like oil especially, start to move? And that's the big question here. And so looking at the CRB index today, we are seeing that we did flag, we did come out, we started this flag pattern, and then we bounced. Now we're heading higher. So now we're heading higher after that flag pattern. And I'm thinking that CRB index, which is mainly oil and energy, that's another thing you have to think about. We're not looking at, when we're looking at this, we're not looking at gold, we're not looking at copper, we're mainly looking at oil and gasoline. So oil and gasoline are still trying to move higher against bonds. Bonds have been a terrible investment. I do think that the idea here, and since 2020 has been bonds will probably be a bad investment for a little while as long as inflation is sticky. And inflation has proved to be sticky. Just go to your local grocery store or look at your grocery bills over the last couple of years. And so let's hop into gold because I know that's what everybody wants to talk about, and it's what I want to talk about. So gold, we had that crazy run in gold. And Sam and I have been talking about this huge run. Sam marked out a beautiful level for everybody to get off of. I can't give that out here today, but if you guys sign up for the Gold Rush, you guys see our research, and those of our subscribers on here, you guys have seen it. But we basically give targets, and we've hit all those targets perfectly and bounced off of them. For me, and as I talk about all the time, I'm a trend guy. I'm going to run a wide trailing stop and let this thing run, see where it ends up. And so, to me, gold is still in an uptrend. It wouldn't really invalidate that till we get under 2,800. But, when you put on these trades the right way at the right time, get the right signals, you're buying a false breakdown that happened in 2023 and you're letting this thing run. You've got time. So let it ride if you're in it. Right now, if you're trying to trade it, I don't think there's really a trade here for a short-term period of time. I think it's let's see if this thing can bottom out and then get up above 3,400, 3,500, and then it's probably got some more upside to go. But once again, the idea of bonds being a bad investment, down 40%, while gold is up, is at 66%. Sorry, that it's on another screen. It's a little bit far from me, but I think that says 66%. So gold making this huge move up while bonds have just continued to move lower. It just says, it says a couple things. One is when you have something that's in an uptrend and it's consolidating, then it breaks up higher. Don't think that because it made an all-time high, it means that you shouldn't buy it, because gold took off another 60% after that. And same thing with bonds. Just because something's cheap, don't think that you should buy it. This is just continues to move lower. I think it's a very ugly chart. I think it's a bad investment. I think people should kind of stay away from it unless it proves itself. We start to get over 130, go ahead, take a swing at it, but don't just try to buy the low in this. So here's gold miners. Here's gold miners versus junior gold miners versus gold miners. So this thing is really looking like a rocket ship. Every time I look at this, it looks better and better. We got that breakout. That's a new high that we haven't seen happen since 2022. That's pretty significant. That big move that happened in 2022, there was Wall Street bets in silver, all these things kind of going on that kind of created little pumps in silver over basically since 2021. But now this is like a significant move that's happening in the junior gold mining space. So I think this thing could move a lot higher. I think it also says that the precious metals bull is intact still. So hopping to the next one, looking at Bollinger Bandwidth and Bitcoin. So if you look at the elections here, you're kind of seeing that we have these band squeezes that happen before the election, and then Bitcoin usually makes a huge move. This year, it made a huge move. It did make a nice move. Granted, not quite as big as the others. It had a pullback, but every single cycle has a pretty nasty pullback. Everybody goes, it's the end of it. I'm not sure. I'm not sure if that's the end of Bitcoin by any means, but I think that Bitcoin is probably going higher here. I don't think that was the end of the rally. I think that over 105, you have a lot of upside ahead. And so I'll get to your questions just 1 second. The last thing I just wanted to show, I am still bullish on the broad stock market in the United States. The reason why is my AAII bulls indicator. So when you look at this indicator, you're basically seeing like when we get to extreme pessimism, it's a buy. We got to very extreme pessimism. This usually creates a massive rally in the market, and we weren't even that much off the high. So I am still thinking that this thing can go higher. So let's get to some questions before I have to run. Okay, so what's a commodity that nobody is looking at that's bottoming? Wavy, great one. So let's talk about soybeans. Everybody loves talking about soybeans. So if we talk about soybeans, basically what I'm looking at here is soybeans are right at a perfect level. And that level, once we break out of that level, it's not going to look back. So if you guys look at a chart of soybeans, you guys are going to see that. It's really exciting. Great setup here because the grains, when they move, they really move, and there's a lot of money to be made. If you don't trade futures, SOYB is the soybean ETF, corn is the corn ETF, and WEAT is the wheat ETF. DBA kind of combines them all with some softs. How long do you think silver can theoretically go sideways before a breakout? I think the market can do whatever it wants to do. I think that's always where I like to start as a trader is think the market will do whatever it wants to do. And whenever I think I know something, it likes to prove me wrong, it likes to make a joke to me, it likes to tell me that I am wrong, I'm not doing the right thing. So I think first off is who knows? It could go sideways for a long period of time. But I think that this is why we look at levels. When we start to get above that $35 level, I think this thing's going to take off. And I think also we're looking at 30 being support at the moment. So 30 buying dips if you're a range trader type or you like to buy mean reversions or false breakdown signals. And then next thing you know, if you're looking at something like the gold miners, the junior gold miners, these things are really already taking off. Yes, they've had some nasty pullbacks and so on. They're going to be the most volatile product out there. There is no more volatile product than gold miners. They're small cap names. They move like crazy. They're going to shake you in and out of these things. But I think that's where the money's going to be made. So silver looks good, but I also think you guys should be looking at the junior miners. They mainly, a lot of them mine a lot of silver. So look at silver miners and junior miners. SLV is making life interesting for me. I would appreciate your analysis through your end. So just through year end, and then after that, I got to go, guys. So through year end, where do I think things go? One is I don't ever do time because people think, you can out trade this market and do things that are just don't work as a trader. What works as a trader is just taking signals. I know silver is still in an uptrend. I know the positioning looks good. I know that junior gold miners are leading. These things are just telling me enough, which is telling me that silver will probably move at some point. This is the hardest thing about trading is time stops are very hard to do. I don't even do them. If I have a trade and it goes sideways for a year, that's fine. It might break out at some point, and when it does break out, that's awesome, and I want to be in that trend. So once again, just continue to take the trades as they come. Don't overthink what's going to happen this month or next month or by year end. And we'll see you guys soon. We'll see you guys next week.